Good afternoon, everybody, and welcome to our YouTube Live. My name is Glenn Tompkins. Glad that you're here. If you are here, oh, Joey's got the chat. If you are here, please feel free to chat in who you are, where you're from, and if you're new or not, or whatever you want to chat in. I like these sessions to be interactive, so the more interactive you are, the more fun these become. So if you are here, don't feel scared to chat in. By all means do. This is a good place to get questions answered when it comes down to these live sessions in regards to what we talk about. So, again, my name is Glenn Tompkins. I work for a company called VectorVest, and I have been here for 14, almost 15 years. I love doing these presentations. I love that we're moving more so into the live streaming platform. It gives us an opportunity, or gives you an opportunity for any of you who have heard me over the years to put a face to the voice. All right, so looks like that has come up a lot in regards to our live presentations. Texas Pete in Houston. Are you a hot sauce, Texas Pete? I like Tabasco, just to let you know. So, but I like the name Texas Pete from Houston. I appreciate you being here. And again, by all means, please feel free to chat in. And I will need some participation from you today in this session where we're going to talk about what type of investor you are. Don't put that up yet, but thank you. So that's what we're going to talk about. So if you are an investor in the stock market and you think you know what type of investor you are, today may open up some other ideas for you to really put into effect the real type of investor you are. Our mantra here at VectorVest is we want you to be in safe, undervalued stocks that are rising in price at the right time or in a rising market. But when it comes down to understanding a trading plan only consists of three things: knowing when to buy, knowing what to buy, and knowing when to sell. That's what investing is all about. And as long as you have a plan, you can plan your trades and trade your plan. And that's a new mini series that we're going to start getting into called Plan Your Trades, Trade Your Plan. But if you're new to the market, being able to understand those three things, knowing when to buy, what to buy, when to sell, you're going to make money in the market. I got Devin D from Austin, next door to Houston, and David is also here as well. So again, keep the chats coming in. That's what I want to hear. And as I mentioned, today I'm definitely going to need your input for today's session. So the more people we have here, the more input I'm going to get from you, and that's going to be a good thing. All right, so you can take that away, Joey, if you want, please. Well, hold on, Frank is here. Hi, Frank. Excuse me. Leave it there, Joey, for a little bit so as I can see more people. All right. Joey is my producer in the background. Say hi, Joey.
Hi.
All right, that's all he ever says is just a quick, curt hi. But that's all right. He controls all of the electronics in the background to make sure everything is good as far as these live streams. Live streams are a little different than a webcast. All right, so this is why I'm really enjoying doing these live streams. So as I get back to the point, knowing when to buy, what to buy, when to sell, that's going to put you in the best possible position to not only make money, but to consistently making money. The tool I'm using is VectorVest. VectorVest has been around since 1995. It's been a long time. They're not a fly-by-night company. I say that a lot because I want people to understand that we've been around for a while. We have a footprint in the sand of all of our accomplishments in regards to helping people make money in the market. We time the market. We'll help you to find the stocks that you need to get into, and we're going to show you how to manage the trades. That's your plan. Knowing when to buy by way of market timing, knowing what to buy, understanding with today's presentation the type of investor you really are. And I think I may take some people by surprise in regards to the types of investors they think they are and tie it into the types of investor they really are. So today is going to be a great presentation in regards to setting that in stone of how you really invest in the market and what type of investor you are. VectorVest prides itself. D. Moody, how are you? I'm glad that you're here, and Joey's keeping that up so I can see who's coming in. Again, the more people I have today, the more useful and more fun this presentation is going to be. The software, again, is designed to help you to make money in the market. So if you're new and you want to learn how to make money in the market, you're in the right place. If you've been with us for a while, these sessions are designed to hone in your skills on hopefully perfecting your craft. Investing in the market is a craft. And the more you know, the better you become by honing in your skill set on that craft. So there's never a time where you're going to ever say it's too much learning. I don't look at it as too much learning. I think that the more learning you have, the more you can apply it, the better of an investor you will be. All right. So that's all about me. That's all about VectorVest. Real quick, hit the subscribe button on the YouTube to stay on top of what new things we have going on. You'll also see that if you've ever looked at our YouTube live channel, it's now transforming into a lot more content, fresher content. And so don't lose sight of that. Make sure you stay on top of what we're offering and what we're giving and the presentations that are coming up. Some presentations may fit what you want to do more than others. That's fine. That's fine. Do we want you here for every presentation? Sure we do. But, you know, use your schedule. Time is a commodity. Use your time to make sure you attend the live presentations that are going to best fit you. All right. And this one today is going to be what type of investor you are. And with that information, as I mentioned, we're going to show you, you can put that up. We're going to show you what type of investor you are. You'll notice that on this little graphic here, there's 4 different types of investors. You have the prudent investor, the aggressive investor, conservative, and speculative. And you see that mark in the middle, helping you to hone in on which one you really are is going to be important. All right, so by way of this presentation, I am going to step out and say that the majority of the people in this room are more so in the prudent category, and I'm going to show you the power behind the VectorVest software to really know what type of investor you are. If you're not a subscriber to the software, you're going to see some of the power that the software can help you to determine the type of investor you are. Some of you may be investing just blindly and, you know, saying, man, I'm a genius. But then when the trades stop working, if you don't have a plan, you're not going to know why the trading plan is no longer working. Best thing to know is the type of investor you are. If I'm a prudent investor, why should I be looking at aggressive stocks? If I'm an aggressive investor, why should I be looking at conservative stocks? So when in our trading plan and knowing when to buy, the second part of it is knowing what to buy. And by knowing the type of investor you are, you're putting yourself in the right position of the right types of stocks to buy. And that's what we're going to talk about today. So let's do this. Let's start off with our home page. And by the home page, you know, if we're looking at the plan starts off with when to buy, right? Remember, always, and if you're new and you didn't know this information, write that down. Your trading plan should consist of knowing when to buy, knowing what to buy, and knowing when to sell. We're going to touch on your when to buy by looking at our home page. And our home page, we like to say, is our traffic light and our newspaper into the market. Many of you are probably looking at television, looking at the talking heads on television to get an idea or a sense of what the market is doing. VectorVest will provide you with that information, and just looking at the home page, you're going to have a better feel of what's going on in the market than many of the talking heads on TV. And they get paid a lot of money to come on TV to entertain you. Now, I'll entertain you here, but I am also going to inform you. Would you rather be entertained or informed? Well, I have a combination of the two, but I'm going to focus more on the informing you on how to make better trades in the market. So, knowing when to buy. Let's look at our home page. Our home page takes a look at what the color guard is doing. This is our daily traffic light because this changes on a daily basis. Green means it's go. Well, green means go in the traffic light. Yellow means slow down. I live in New York, or actually I don't live in New York anymore. I'm from New York, but I always remember that when you get a yellow light, you speed up before you get a red light. But technically, you should be slowing down before you get a red light. And then, of course, the red tells us stop. In this case, in the market, it tells us to stop buying stocks long. Green means it's okay to buy stocks. And this is where we are right now on a daily basis, looking at the yellow light. Now, let me explain to you by looking at that daily information, what do you do with the stocks that you own? On a down day, as you can see down below on our quick list, all of the major indices are down. The problem is here, this is where a lot of people start to panic. Well, as a VectorVest subscriber, knowing when to sell and having your plan in place, you're going to get out at the right times and you won't panic sell. Many of us will panic sell. I won't anymore, but many of us panic sell, and then the stock goes up drastically the next day and you sit back and go, oh my goodness, why did I get out of the stock? Well, you got out of the stock because you didn't have a trading plan to know when to get out, knowing when to sell. So right now, in the yellow, even though the market is down today, today is a day to just slow down, manage your stocks with your stops that you have. Now, what else can you do? How about tightening your stops? Because I'm going to show you that the market is getting to a point where it's starting to get toppy. David says, it depends on how much Cafe Bustelo I've had to drink. There you go, David. I like that. I'm a big fan of Cafe Bustelo, and I always promote them even though they're not paying me anything. It's one of the best coffees in the world. For my personality of always being upbeat, Cafe Bustelo is a good way to keep the blood going for sure. All right, way to go, Joey. And we went back to pumpkin time. Thank you, Joey. He does a great job of making sure that I look good, but he put us back into Thanksgiving for a little bit. Maybe he's looking for some turkey and some ham. All right? Is that what's on your mind, Joey?
No.
Okay. He said yes, so that's good. All right. I love having fun here. So as we look at our daily traffic light, we're yellow. This is not a time to panic. This is just a time to manage your stops. And if you want to do anything, maybe tighten stops. What do I mean by that? Well, if I have hard stops on the stock, let's say if I'm looking for a stock to go up 30% and I get out, or go down 10% and I get out. Tightening your stop means maybe you take that 30% to the upside, tighten it down to 20. Maybe you take that 10% to the downside, tighten it up to 5. What does that do for you? Well, in a time where the market is starting to look toppy, you're going to take your winners early and you're going to get out of your losers early as well. So that's the beauty behind tightening stops, and it's all in preparation in case the market is poised to move to the downside. Now, I didn't say that that was the case yet, but we're going to take a look at a market timing graph to get a better feel of what's really going on. But the home page is putting to the forefront a time to be cautious. Let's go down to our color guard. Our color guard now is a 5-6 day snapshot of the traffic light. Notice that I can look at the preponderance of colors over the last 6 days in the trading market. Now, the color guard tracks 3 of our market timing indicators. Price, which is the price movement of what we call the VVC or VectorVest composite. It is an indexed arithmetic average of all of the stocks that we track, which currently is 8,094 stocks. When we look at the Dow and we say the Dow is down 245 points today, we say the market's down, but the Dow only tracks 30 stocks, albeit there may be 30 of the most strongest stocks in the market, but it still only tracks 30 stocks, all right? The NASDAQ tracks about 4,300 stocks, thereabouts. So that's more than 30, and when it's down, we say the market's down. But the NASDAQ is very tech heavy. A lot of the tech stocks are comprised within the NASDAQ, all right? So even though it tracks more stocks, it is more weighted to the tech stocks, and a good stock or a bad stock can really affect the NASDAQ tremendously. If Apple has a great day, the NASDAQ will be up. If Apple has a bad day, the NASDAQ could be down. So it's very tech heavy, and it looks at all of the big tech stocks. Down below that, we have the S&P 500. Those are a lot more stable stocks from the standpoint of it's a good group of stocks, but it's only 5 or 100 stocks. It does a good job, and many people will track their portfolios against the S&P 500. Some of the best stocks in the market are in the S&P 5 and 100. The more elite stocks are in the S&P 100, but still they only track 5 or 100 stocks. When we get down to the VectorVest composite, that indicator is down about 0.2% today, down about 22 cents, down about 0.5% today. But this indicator is more inclusive of the total market as it looks at 8,094 stocks. We use that more so for market timing because of the amount of stocks it tracks. Also, in the color guard, we track the RT, which is one of our core. Woo, I got new lips today. We got the RT tracks. It's one of our core proprietary indicators, which is cast on a scale between 0 and 2. We make understanding that indicator very simple. When the indicator is above the value of 1, it's favorable, and when it's below the value of 1, it's unfavorable. Makes it real simple. Now, RT is going to answer one question when it comes to market timing. If the market is in an uptrend or not. RT above 1, first off, it's favorable. Second off, it tells us that the market is in an uptrend. When RT is below the value of 1, the market's in a downtrend. That indicator in and of itself will put you ahead of the curve on many of the other talking heads on TV. They are talking based on a conglomerate of a lot of data, and they're trying to take that data and put it into useful information. Well, we streamline that data to put it into useful information with the RT. RT below 1, the market's in a downtrend. RT above 1, the market's in an uptrend. Currently today, it's at 1.05, so the market's in an uptrend, but it has fallen on a day-over-day basis. So it's a little bit of weakness creeping in, but we are still overall in an uptrend. The next indicator is the BSR, or buy-to-sell ratio. Every stock in our database gets a buy, a sell, or a hold recommendation every single day. We look at the relationship of buy recommendations divided by sells. Now, when we get a buy recommendation, a lot of things need to happen for the stock to get a buy recommendation. Only one thing needs to happen for a stock to get a sell recommendation. And when all of the characteristics for a stock to become a buy are not there, it automatically becomes a hold. So these are recommendations based upon how VectorVest analyzes stocks. Right now, we have 2,264 stocks that are buys and 1,080 stocks that are sells. Clearly, more buy recommendations in the software than sells, so this indicator says it's at 2.10. If you divide the number of buys by the number of sells, you get a ratio of 2.09. That tells me for every sell in the system, we have 2 buys. This indicator looks at the overall health of the market. Above the value of 1, we have more buys than sells in the system. The market is showing signs of strength. When the buy to sell ratio goes below the value of 1, we then have more sell recommendations in the system than buys, and the market is showing signs of weakness. So we're tracking the movement of the VectorVest composite, along with is the market in an uptrend or downtrend, along with the strength or with the overall health of the market. This color guard in and of itself will put you in a better footing on truly understanding what's going on in the market on a day-over-day basis. You can spend a lot of time looking at a lot of people on TV to try to discern whether the market is really bullish or bearish, if it's in correction territory, are we going into a recession, is the sky falling, does the king have on new clothes, that's the emperor's new clothes. You can go through all of that stuff. Is there really a Loch Ness monster? Things that make you go, But with this information, the color guard puts to the forefront what's really happening in the market. You are now better prepared, you're better qualified to make a decision in your trading plan of what you should be doing, all right? So now from here, let's go over to the market timing graph. So we get a feeling that we're getting a lot more yellow in the color guard. More yellow means that it's time to slow down. We also look at on a day-over-day basis by way of our daily traffic light, we're still in the yellow. Market is down today. Let's take that information to the next step. I'm going to move us over to the market timing graph. And this is the movement of that VectorVest composite. Remember, the VectorVest composite tracks the movement of over 8,000 stocks, and we can determine whether the market's in an uptrend or downtrend. Looking at the VectorVest composite shown here in candlesticks, let's take crosshair cursors off. This is shown in candlesticks. I can truly see when the market is moving up and when the market is moving down. Remember I told you that we time the market? Well, we use that indicator, the VVC, to time the market, but by saying that we time the market, we don't prognosticate which direction the market is going to go. So in our sense of timing the market, we follow the trends in the market, and the market does go through trends. The market rises, the market tops, the market falls, the market bottoms. The market rises, the market tops, the market falls, the market bottoms. The market rises, it tops, it falls, and bottoms. It rises, it falls, it rises, it tops, it falls, and bottoms. And it does it all over and over and over again. So currently, with the most recent market activity, we can see that over the last 2 months, I'll put it on 3 months, over the last 3 months, the market has fallen and it's gotten beaten up going into the end of the year. This is the movement of over 8,000 stocks in one ticker symbol, and I can truly see when the market is moving down. The market bottomed at about oops, darn, I pushed print. I didn't mean to do that. The market bottomed, that's interesting, it looks different now. What did I do? I don't know. Well, the market bottom, change that, on 12/24, Christmas Eve. All right, and then it started moving up. Since that move, we've been in a nice uptrending market. And notice that as we've been moving up, very few down days, which are depicted by the red candles. All right, now the market has gotten to a level where it's looking toppy. How do I know that? Well, as a VectorVest subscriber, we have an indicator that tells us when the market is starting to look for a top. That indicator is known as MTI. That is the market timing indicator. Now, as the market gets to a certain level, let's click on here. That was the actual top coming off of this bottom here on 2/5 of 2019. The MTI struck a level of 1.52. When the market or the MTI gets to a level between 1.5 and 1.6, the market is starting to look for a top. Keywords are starting to look for a top. The market doesn't care what we say. The market, we're tracking the trend of the market and using indicators to know when the market is looking toppy. So you can say, well, how about here when the market was looking toppy? Notice that the MTI was not at the level where it was, look, oh, you can't see it. All right, that's fine. In regards to knowing when the market is toppy or not, when the MTI or market timing indicator gets us to a level where we're looking for a top, as a VectorVest subscriber, you have that information. From this level of a top, what's happened for the last 3 days? Market's moving down. This is where a lot of people get caught up in panic selling because they don't know what's going on. I'm telling you that right now, the market is still strong. It's just got a little bit of a reprieve, but that makes sense. The market has been going up nicely over the last couple of weeks, couple of 2-3 weeks, and now it looks like it could be, people taking profits off the table. There's nothing abnormal about that. But I do want to show you that the market does have a level of a support level right here, sitting at about $43.25. This level of support is going to be a very telling sign of if the market has legs to continue moving to the downside or if it's going to start moving back up again. Learning how to use technical analysis on a market timing graph or any other kind of graph is going to be very important in giving you crucial information as to what should be going on. So if you're still trading stocks to the upside off of this nice uptrend right now, what do? Well, if these are stocks that are your core holdings for retirement, think about putting on a possible options trade, sort of like a covered call. Or if you don't want to do that, you want to now take advantage of a stock's price moving down a lot, buy a married put on the stock. So for every point that the stock goes down, that put goes up in value. So there are a couple of ways to keep you from panic selling, and just look at the stops that you have on your individual trades as well as a means to knowing when to get out. So right now, based upon what we see in the market timing graph, this is probably not a good time to put on new stocks, all right? So now, let's say that it was, all right? Let's say that it was, and now you got, by way of knowing when to buy, this is not the right time to buy, but let's pretend that it was. Let's pretend that it was. The next part of your plan is knowing what to buy. And now we're going to go back to, and I'm going to bring up a graphic for you. I'm going to talk about a couple of things that you can use within the VectorVest software to know the type of investor you are of what to buy. All right, so Joey's going to put that up. There we go. We have something, oh, it looks better this way, Joey. Take me off. We have something known as the investment matrix. And this investment matrix is going to put to you in your hands what we look for to determine the type of investor you are. You'll notice that we have 4 quadrants on the screen. We have in the top left, the prudent, investor, the top right, aggressive investor, bottom left, conservative investor, and the bottom right, the speculative investor. Everybody in this room falls into one of these categories. So for everyone who is chatting in, I want you to chat in what type of investor you think you currently are right now. All right, now while you're putting that in, I'm going to take a drink of water, but I'm going to give you some opportunity. I want everybody in the room who has the ability to chat to tell me the type of investor they think they are. All right, so go do that now for me. If you're not sure of the type of investor you are, then let me teach you on how the VectorVest software will tell you or help you to know the type of investor. There you go. I got Mike. Mike says aggressive. Kelly, I'm going to call you Kel. How about that? Aggressive. Texas Pete says prudent. Well, if you're Texas Pete, you should be aggressive. I like me some hot sauce. David says prudent. So I've got two people who were brave enough to tell me that they were aggressive. Devin says prudent speculative. Whoa, that's a strange combination to put together. And in that, it is so far apart from each other besides saying prudent and speculative. I'm going to see if I can hone you in on a better choice, Devin. I'm going to see if I can hone you in because that's a wide spread in regards to the type of investor you are. So I'm going to take what the people said. A few of you said prudent, a couple of you said aggressive, and somebody said prudent to speculative. Wow, that's a big, well, I don't know if that can really happen. And as I give this presentation, you're going to get a better feel of why I say that's tough to see. Now, you have the four quadrants. Look to the left. All right, look on the side of the left. Devin says, tell me about it. I know, I got you, Devin. I got you. Look to the left of the graph. You're going to see what your reward is. So your reward from low to high. Look to the bottom. You're going to see what your risk is from low to high. So understanding the type of investor you are includes knowing what your reward to risk calculation is. All right, and that's going to be more about how you fall into those four quadrants. Now look at the top of the graph. There's two indicators that we use specifically for finding out the type of investor you are. Out of our four or so proprietary indicators, relative safety and relative value are the two indicators that we use. Relative safety also casts on a scale between 0 and 2, but for this presentation, we're looking at values above 1.5 and values below 0.50. All right, and on the relative value side, well, let me tell you, relative safety is an indicator of risk for a stock. Remember, I'm trying to determine the types of stocks or the types of stocks that I'm looking for. We're going to use two fundamental indicators to help you with that. RS, or relative safety, RV, or relative value. Relative safety is an indicator of risk for the stock. The definition of relative safety, it looks at the consistency and predictability of a company's financial performance. Listen to those words. Consistency and predictability of a company's financial performance. The financial performance we're looking for is earnings. Okay? When the stock has good earnings and it meets or exceeds earnings, the stock's price is going to have a tendency to rise. When a stock misses earnings, it's going to have a propensity to fall in price. Relative safety is an indicator which is going to put the odds in your favor if the stock is going to meet or exceed earnings expectations. We're looking at the consistency. How consistently does the stock meet or exceed earnings? And the predictability. If it's consistent, predictably, we can say that the stock is going to meet or exceed earnings. When relative safety is above the value of 1.2, 1.25, that's a good, safe stock. It's got a track record of meeting or exceeding earnings. So the higher above it is, the stronger the possibility the stock is going to meet earnings. And if that happens, the stock's price, for the most part, should go up. Now, a lot of times the stock can meet earnings, but still go down because forward guidance wasn't good. I don't have an indicator about forward guidance, just on if the stock meets or exceeds its earnings. The next indicator, relative value, RV. Relative value looks at the stock's long-term price appreciation potential. It's potential that over the next 1 to 3 years, will this stock have the propensity to keep moving higher? The long-term price appreciation, stocks price going up, and its potential. Now, in order to get the value for that, we compare the stock to an alternative investment in a AAA corporate bond. What is a bond? A bond is a way to raise money. If I have a company, I can say, here, buy this bond. All right, buy my bond, and after it matures X amount of years, X amount of months, however, I will give you back all your money with a little interest rate. That little interest is a good way of me saying thank you for taking the chance to buy my bond. It's not a lot of money, but it's a way for me to gain and grow capital for my company, okay? Now, as I do that and consistently do that, I can take in more money. But when I look at relative value, above the value of 1 tells me that this stock, whichever stock I'm looking at, will have the propensity to outperform that AAA corporate bond. So what is a AAA corporate bond? That is the best rating that you can have on a corporate bond. That is a rock steady bond. Now, there's also things called, not garbage bonds, what are they? Junk bonds. All right. Now, if I've got a company and I'm just really not that good of a company, but I need the money, the capital to raise for my company, I can offer you a bond. But instead of paying like a 2% interest or 3% interest, I'm going to pay you a 20% interest rate for buying this bond. That 20% says you're taking a chance on this bond. It is a junk bond. You're taking a chance. But if you get paid back, keyword, if you get paid back, you're going to get 20% on that bond. That is good for a lot of riskier people to say, listen, if I give you $10,000 to buy this bond and you're going to give me 20% on that, I'll take that chance. But a lot of people are like, if I'm going to buy a bond and I know it's a safer investment, I'm going to do it on a better, nicely known company. But junk bonds are a great way that you can make a lot of money real quick, but the chances are you may or may not get paid back. All right, that's what a junk bond. So all the way from a junk bond to a AAA corporate bond, that's just a little brief understanding on how that works. All right, so the 2 indicators that we're going to use is relative safety and relative value, and using that in conjunction with your reward or risk will put you in the quadrants that you are in. All right, so now with relative value, you notice on the bottom, I have some typeset for you. For a conservative investor, I want that long-term price appreciation potential. I'm willing to give up a little bit on that. All right, so I'm not looking for the stocks that are going to be like shooting up big time for the next 1 to 3 years, thereabouts. But what's key for me is relative safety above the value of 1. That's what makes up a conservative investor. It's all about the safety. Conservative investors are longer-term investors that also look at dividend plays. They try to generate capital on those stocks. So not only will they make money on the stock's price appreciation, but they can also make money on the dividends they collect. How about if I sell a covered call on them over and over? There's 3 ways that I can make money on a longer-term investment. It's a good long-term investment that I know it's going to go up, so I make money on the price appreciation. I turn around and I collect the dividends quarterly. I'm making more money. And if I want to put on an options play and continue to sell covered calls, I'm taking in premium, taking in income as well. I can make on a core holding money on that stock 3 different ways, all at the same time. It's a great way to go. The prudent investor, they want the relative value to be above 1 and relative safety to be above 1. They want what we call the best of both worlds. They want stocks that go up in value, but they want to not take on a lot of risk. Relative safety above 1 is a less riskier stock. Relative safety below 1 is a more riskier stock. The aggressive investor, the people who told me in here that they are more aggressive, they have an RV of above 1. They want the stock to definitely make money in the long term, but they're willing to give up some safety on bigger gains in stocks. So they're going to give those stocks a little bit more room to run in anticipation that the stock is going to keep moving up. And then we have the speculative investor. They have RV below 1 and RS above 1. These are the people that throw caution to the wind. They don't look at any fundamentals on the stock. And I liken the speculative investor to a home run hitter. I'm a New Yorker. I'm a New York Yankee fan. Reggie Jackson was a big home run hitter. But what else did Reggie Jackson do? I got some people in here from Houston and Dallas. What do I have? I have the Houston Astros, and I have the Texas Rangers. Do I have another Texas team? Texas Rangers, Houston Astros, that's American League and National League. Is there another Texas team that I'm missing? I don't know. Somebody in here will tell me if that's the case. But home run hitters hit a lot of home runs. What else do? They strike out a lot. That's what I liken the speculative investor to. The speculative investor is looking to hit those home runs. They're looking at stories. So when an FDA approval comes out on the stock, the speculative investor thinks that the stock is going to go up, they're going to go buy into that stock. Or if earnings come out on the stock, speculate that the stock is going to go up or go down, you play one side. Or if a company has the CEO being let out in silver handcuffs or silver bracelet, that could affect the stock. So those are the three things that speculative investors will look for. They trade the news. They don't use any market timing. They're not looking at the fundamentals of the stock. They're strictly trading the news. And if you're on the right side of the news, folks, you can make a lot of money in a short amount of time. All right, so looking at what's going on, let's go up to the prudent column on the prudent sector. That's the top left. Where's relative safety on the prudent side? Look, the arrow is going towards the level of 1.5. What's the relative value doing on that? In the top left, look at the what's actually on the right-hand side. Look at the relative value. Relative value is at 1.5 as well. So on the prudent side, you're looking for stocks that have a relative value above 1 and a relative safety above 1. Remember, they want to make money, but they don't want to take on a whole lot of risk. Let's go to the top right where the aggressive is. Oh, look at where relative safety is pointing. Relative safety is pointing to the downside or to the value of 0.50. But look at the right side where it says relative value. Relative value is on the upside. So the prudent investor is looking for stocks that are going to have the opportunity to make money in the long term, but they're willing to assume some risk by getting into a little more riskier stocks. Let's go to the bottom left corner where you see conservative. Now notice that the reward is low, so I'm not looking for stocks that are going to explode and make money for me short term, but what is the high? The risk is low. So the relative safety, I want it to be above 1. The conservative investor, I already did. Now the conservative investor is all about safety. All about safety. And let's go to the bottom right quadrant where you have the speculative. Notice that the risk is high and the reward is low. All right, the risk is high, but the reward is low. Relative safety below the value of 1 and relative value below the value of 1. They truly throw caution to the wind. So as you determine the type of investor you are, these indicators put together for you, relative value and relative safety, will help you to hone in. So now let's take that information and put it into practical application within the software. Now we're going to get into the Viewers tab. Okay, we're going to get into the Viewers tab in the software. And from the Viewers tab, I'm going to show you how to build a watch list of stocks. That watch list of stocks will look at the average values of relative value and relative safety to help you to make a decision on where you should be. Now, real quick, before we do that, I'm looking at the stock viewer. I'm going to show you how to analyze any stock in our database. A stock gets a price where it's trading. I'm looking at real-time data, so you're seeing everything change real time. Every stock has a value. The value is what we feel the stock is worth. Remember, our mantra is to buy safe, undervalued stocks rising in price in a rising market, where I can clearly see by way of price and value that this stock is undervalued. Now, the next 4 indicators or 5 indicators are all proprietary indicators cast on a scale between 0 and 2, no matter which indicator you're looking at. Above 1 is favorable, below 1 is unfavorable. First stock in the database by way of our master indicator, VST, that's what it's looking at. All right, VST sorted all the way down. The first stock has an RV greater than 1, nicely above 1. We know that this is the long-term price appreciation potential. I know that this stock should outperform that AAA corporate bond by 42% over the next 1 to 3 years. This is a stock that I want to hold long-term. Relative safety, that indicator of risk. Above 1 is favorable. The higher above 1 it is, the more favorable it is. But still, above the value of 1, the stock has got good safety. Most likely, this stock will meet or exceed earnings expectation. Now, we only talked about RV and RS on our investment matrix. We're one of the only companies that when we analyze a stock, that we look at the fundamentals with the insight of technical analysis. RT is our technical indicator. It's a price-based indicator. RT above 1 tells me that the stock's in an uptrend. This RT is pegged all the way to the top at 2. This stock is definitely in an uptrend. We take all 3 of these and wrap it up into our master indicator, VST, which stands for value, safety, and timing. Remember, relative value, relative safety, relative timing. So this is a vector formula. It looks at the square root of the weighted sum of the squares. And if you were impressed with that, you should be, because I know very little when it comes down to math, but that is the vector formula, how we get our VST score. Now, the last indicator is CI. CI stands for Comfort Index, also cast on a scale between 0 and 2. Comfort Index looks at the stock's ability to withstand long or pricey, or long or trending price declines, or long or lengthy price declines. These are stocks that when they do go down, they rebound, they're very resilient, and they go back up. The CI above 1 tells me that those stocks tend to continue to rise. They go up more than they go down. So the PCM or PCMI stock has got a CI at 1.65, and the stock's a buy. So real quickly, we just analyzed a stock. All right, now I'm going to take this a step further. See, I can't do that over here. You told me I should just be able to do that.
You got to go back in the program.
All right, let's see if it works from that way. Go to home. Let's go to the viewers. Oh, there we go. All right, so from here, we're going to build a watch list. This is where I need your input. We're going to look at a watch list of stocks as a group. So whether they're stocks that you own, whether they're stocks that you've owned in the past, whether it's stocks that you're interested in, I need you to put in the stock symbols for me as we build this watch list. I'm going to show you how to do it. We're going to go over to my watch list, and we're going to build a new watch list. We're going to simply click on New. We're going to call this YouTube Watch List. Simply once we've done that, we can now populate our watch list with stocks. Any stocks coming in yet, Joey?
Not yet.
Not yet. All right, so I'm going to give you an opportunity to get your stocks looked at, and by way of putting these stocks in, it will determine, I'm going to show you how the power of the software will help you determine the type of investor you are. If you're not going to be wanting to put some stocks in, I'm going to start putting some stocks in on my own. All right? Now, let me show you how easy it is to put a stock into a watch list. Simply type in the symbol, ULTA, for Ultra Beauty. We'll hit the comma button, and we're going to keep on building more stocks. As stocks come in from Joey, Joey will let me know. Going to look at CRM.
Devin said KL.
Comma, KL. Thank you, Devin. Comma, I put in Visa. I'm going to look at CTSH.
ABT from Con.
ABT from Con.
EA.
ABT. EA from who?
Kel.
Thank you, Kel.
Frank says CRM.
See, I already have CRM in there, Frank. So that
says CMCSA.
CMCSA, Comcast. Here in North Carolina, they got bought by Spectrum, didn't they? That was a long time ago. All right.
Devin says ACB.
ACB, a marijuana stock. All right. I'm going to put in some other stocks as you go along. CEN, EDIT, comma, WVE, comma. Give you a couple of seconds for a couple of more stocks along the way.
Let's say drip.
Drip, so we'll type in drip.
LABD.
Comma, LABD.
We already put in KL.
Yep.
Devin says V.
V, I already got Visa in there already. 3, 2, 1, done. All right, I'm simply going to hit enter on the keyboard, and let me show you the power of the software. Notice that we put all of the stocks in there, but the stocks are now going to automatically come up sorted under our master indicator VST. So the stock that's got the best combination of relative value, relative safety, and relative timing will migrate to the top of the list. How cool is that? Now from this list, I'm going to show you, if these are stocks that you own, how to manage these stocks in a second. All right, so now I look at all of the stocks. Kirkland, the stock is at 33, value is at 47, undervalued. Good upside potential, RV. Okay with safety. It's above the value of 1, so it's favorable. RT tells me that the stock is really moving up right now. The VST puts the combination of all together, and the stock's got a buy. It's got a CI of above 1. This stock goes up more than it goes down. Let's look at CRM. The stock is overvalued, all right? But the relative value is above 1. This is something known as a glamour stock. That the stock is way overvalued, that means that people are willing to pay a premium to own this stock. Just because the stock is overvalued doesn't make it a bad thing, but you need to be careful with it. It's got good upside potential. It's got good safety. This stock seems to meet or exceed earnings every quarter, and it's going up in price because RT is above 1. VST is at 1.44. The stock does go up more than it goes down by way of CI, and it's a buy recommendation. Electronic Arts, undervalued. 94 is less than 113. Good upside potential by relative value. Good safety by way of relative safety. The stock is going up in price, and it's a buy recommendation. I can do this all day long, and all it's telling me is that the VectorVest software is looking through the over 8,000 stocks. A subset of those stocks are the stocks that we just put into a watch list, and we're getting better information about what to do with our watch list.
Con put another stock in, ABBV.
ABBB. Let's go see if I can make that happen. ABBV.
Yep.
All right, I just added that, and bingo, it jumps in. Let's see where it went.
Right there.
Here it is. So by way of VST, it went to about the middle of the graph. Analyze it real quick. Nicely undervalued. Good upside potential. Safety is hurting it. It is below the value of 1. What else is hurting it? The stock is in a downtrend right now. I haven't even looked at a graph of on any of these stocks, and these indicators give me a good feel of what's truly going on with any and all of these stocks. Now, because it's got a nice high relative value, it does have VST above the value of 1, so it's still favorable. But this company probably goes down more than it goes up, and it is a sell recommendation. I can tell you that the equity curve of this stock is probably something like this, and then starting to pull back. All right, and that's without knowing anything. It just turned to a hole. Remember, we're looking at real-time data, so we're going to get actual up-to-date, up to the second updates on every single one of these stocks. All right, so it's set up sorted by VST. Now I can go to the bottom where it says watch list average. What are the two indicators we're looking for? Relative value and relative safety. Oh, so even with this portfolio, what kind of investor is this portfolio fashioned after? RV above 1, RS above 1. What kind of investor, based on the investment matrix, would this person be? Type it in the room. What type of investor would this person be by way of relative value and relative safety? I'm going to see if you're going to put it in. There is a delay. I know there's a delay. But in the meantime, until you type it in, this person is a prudent investor, because RV is above 1, RS is above 1. So overall, it is a prudent investor, but the relative value, relative safeties are not gangbuster moving up from that value of 1. But nonetheless, again, to make it easier, above 1 is favorable, above 1 is favorable. Nonetheless, this watch list of stocks is more prudent than anything.
Yeah, Devin said prudent.
There you go.
Says aggressive. Con says prudent.
All right, so one person said aggressive. The way that this would be aggressive is if RV was above 1 and RS was below 1. So now, let's do this. So we see that, before we do what I'm getting ready to do, let's say that this was your portfolio. How can I use the power of the watch list to manage my stocks? Well, once you get into the stock, what is the most important thing? Is if the stock is going up or down in price, right? We have an indicator for that. So I can take these 15 stocks that I have in here. Let's say that this is you. I can take these 15 stocks and use the power of the watch list to manage the trades. If I'm looking to see if the stock is still going up or down in price, sort this list by RT. Now the stocks that are moving up the fastest will be at the top of the list. Those are the stocks that are making money in your portfolio. But if I'm looking to manage the stocks that are hurting my portfolio, start looking at the stocks that have RT below 1, starting with ABBV. What's the last one? LABD, which has got the RT lower than 1 as well. These are the stocks, most likely, that will have your sell recommendations. These are the stocks that are hurting your portfolio. These are the stocks that you probably have to consider cutting. This is what we call weeding your garden. If these are your stocks, use the power of the VectorVest software to help to manage the stocks that are hurting your portfolio. If these are yours, and you'll probably be looking in there going, well, you know, I'm going to give it a little bit more room. The more room you give it, the higher the probability is you're going to help to incur more losses or higher risk.
Con says, why did it go up to a hold, ABBV? But I think he's looking at the wrong stock.
No. He probably did. He saw ABBV bounce back and forth between a sell and a hold. All right, so the way the stock gets a sell, if the stock's price, which is $79.17, drops below the stop price, which is a 13-week moving average adjusted for the fundamentals of the stock. $79.17 is below the value of $79.25, it becomes a sell. As soon as this price rises back up above $79.25, the stock will automatically get a hold again. Only one thing needs to happen for a stock in our database to get a sell, and that's for the price of the stock to go below the stop price, which again is a 13-week moving average adjusted for the fundamentals of the stock. Oh, what are the fundamentals? RV and RS. Notice that RV is above the value of 1, but RS is not. This is helping to put that stock below its 13-week moving average, which has been adjusted for relative value and relative safety. Does that answer your question?
He says, do ETFs have the same rule?
ETFs don't always have this. Well, they still have the same rule, but you'll notice with ETFs, I can only track RT. Relative value and relative safety are not tracked on ETFs, so I can quickly discern which stocks in here are ETFs. Why is that? Because an ETF, which is an exchange-traded fund, tracks either a group of stocks or an index. It's hard to put a relative value and a relative safety on a total group of stocks or on an index. So when I'm looking at ETFs, I'm strictly looking at RT. Is that ETF in an uptrend or a downtrend? All right, so again, the power of the software is not only sorting these stocks by VST to see which ones have the best combination of value, safety, and timing, but from the standpoint of trying to manage the stocks that I have, highlighting the stocks that have RTs below the value of 1, these are stocks that are clearly hurting my portfolio and should be considered to be sold. All right, we're going to do this one more time. All right, I want you to put your thinking caps on. So this was a prudent folder. All right, let's go. I'm going to make a copy of this. I want you to do it again. Give me some stocks. And now, this time, I want all the off-the-wall stocks that you can give me. Stocks that a lot of people don't know about that you may know about. All right, put those stocks in, and let's see if we can get a different type of investor. All right, so do that for me. I don't have any stocks for that right now, so I'm strictly looking at you guys for these stocks.
He says, do you look at EPS and growth?
The question is, do you look at EPS and growth? On my longer term stocks, I will. So while you're coming up with that list of stocks for me, if we go back to the YouTube watch list, on the stocks that are making money, where the relative value, relative safeties, and relative timings are all up, look at these. These stocks are going to have good growth. They're going to, what did you say, EPS and growth? How about the stock is making $2? but look at the growth. Kirkland is growing its earnings by 37% a year. Salesforce by 34% a year. Electronic Arts by 20% a year, and so on. Also, though, remember I have a stock that's got an RT below 1. Oh, I don't anymore. Sort this by RT again. RT below 1, ABBV. They grow their earnings nicely. They make a lot of money. All right? Earnings per share is really good. But right now, have you ever heard the statement, it's a bad time to buy a good stock? And that's what's going on with this right now. I like that they grow their earnings by 20%. I like that they make a lot of money. That's a lot of money on a $79 stock. All right, that's more than 10%. All right, they are definitely, and the earnings yield is high. That's a good stock, but right now it may not be a good time. So hopefully that answers your question in regards to that.
I found myself looking at RT and RV when making decisions. Is that an okay strategy?
All right, so the question is, currently I look at RT and RV to make a decision on stocks to buy. Hopefully looking at the fundamentals like ABBV, looking at it's got good upside potential. So this is a stock that I would want to hold, but right now may not be the time to buy it. RT is strictly going to tell you if the stock is going up or down in price. My suggestion is if I'm looking for stocks to get into, I probably want RV and RS to be above the value of 1, unless I'm a little bit more aggressive, where I definitely want RV to be above 1 and maybe RS to be below 1, and I don't have that in here as an aggressive. All right, but it all depends on what your overall outcome is. The overall outcome is to make money. Totally, we know that. But it's the right way to make money depending on how you invest in the market. You are looking at those two levels of RV and RS.
Stocks.
All right, so now you got stocks?
Yep.
All right, let's go take a look at these stocks. Rock and roll, Joey.
STLHF.
LHF. Holy crud. All right, next one.
MBOT, MBOT.
MBOT. TH.
Organogram.
I don't track TH.
Maybe he was trying to say thanks. But,
Oh, okay. Go ahead.
but it's Organogram. ORGAN.
ORGA. Let's go see if I can find it. There it is. OGRMF. So if I don't know, is that what it is?
Yeah.
Organogram. If I don't know the ticker symbol, notice how I can just type in the name and it'll bring it up. So OGRMF. OGRMF. How cool is that? Next one.
City Holding.
City Holding? Like Citigroup?
Yeah, I guess. CITY.
C. What's
CITY.
CITY? I don't track it.
It's on the top.
Oh, City Holding. Chico. You remember Chico and the Man? Looking good. CHCO. CHCO. Okay. Next one.
KEM.
KEM. Okay.
And Gilead.
GILD. Gilead Science. Okay. Anything else?
That's all.
All right. Let's go see what kind of watch list this is. Let's go analyze them real quick, though. Man, you gave me some good stocks. I believe, oh, this is going to be good. You gave me some good stocks. All right, let me do this auto fit real quick. All right, analyze this. City Holding came to the top of the list by way of VST. I've only got out of the 6 stocks in here, only 3 that have a VST above 1. You did give me some good off-the-wall stocks. I love that. All right, this stock, Citigroup, is undervalued. Good upside potential. The safety is not there, and the stock is in an uptrend. CI tells me that this stock actually probably goes down more than it goes up. It's got good earnings growth rate and it's got good earnings per share. Kemet, undervalued, good upside potential. Safety is not there. It does have a VST greater than 1. CI tells me that this stock definitely goes down more than it goes up. Organogram, fairly valued. Good upside potential, safety. Notice that a lot of these stocks have bad safeties. These are more riskier stocks. Remember, relative safety is an indicator of risk. These are more riskier stocks, but the stock is going up right now. All right, fairly valued, good upside potential, not a safe stock. This is more of a technical play because the biggest mover in here is RT moving up. Next one, Gilead. Tad bit overvalued, not good upside potential. Safety is below 1, RT is below 1, VST below 1. MBOT, overvalued, not good upside potential, not good safety. The only thing that's going on with MBOT right now is that it's going up in price. This is more of a technical play. Look at all of the information I'm getting just by analyzing the stock. Penny stock, 89 cents, is overvalued, not good upside potential, not good safety. Stock is still in a downtrend right now. How cool is that? So now let's look at the relative values and relative safeties at the bottom. What kind of investor is this? Relative value below 1, relative safety below 1. What kind of investor is this? I'll give you the song for Jeopardy. Do 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 do. That's enough of that. All right. Anybody putting any answers? No, not yet. Again, it's the delay. This is more of a speculative investor. How cool is it that based upon the watch list that comes up, the watch list you put together to help you determine the type of investor you are? You can't get any easier than that. And whether you're a subscriber to software or not, that, my friends, is what it's all about. If you're going to set up your plan and knowing when to buy and what to buy and when to sell, then this is the good way to go to make that all happen. All right. With that, I'm a tad bit over. I'm okay with that as long as you're okay with that. Did you guys learn some stuff today? And how many of you changed your minds based upon what we saw today of the type of investor you are? Just type a yes in the room. Or are you sticking with what you thought? All right? If you're going to say you're going to stick with what you thought, just put what I'm sticking. And if I were able to change your mind to really show you the type of investor you are, type a yes in the room. All right, we're going to do that as we end the session today. I want to see what's going on. I want to see what you say. So if you liked what you saw today, write a comment to let us know you liked what you saw today. Give us a thumbs up, something along those lines. And if you're looking for specific content that you'd like to see going forward, let me know that as well. So I just changed that up.
Tom said aggressive, Frank says aggressive, Texas Pete says speculative.
Wow, Texas Pete says he's more speculative. This is the kind of...
I think he was talking about what that...
Oh, he said that this was speculative. Yeah. Okay, I got you. All right, so I'm glad that you guys got a better feel of what you are. Maybe this was confirmation of the type of investor you are, which is great. Or maybe this opened up the doors to you understanding give you a better understanding of what type of investor you truly are. That was the purpose of this presentation. Again, if you like what you saw, leave us a comment. If there's things that you'd like to see, let us know. Because we are revamping our YouTube Live. We're getting nice, fresher, awesomer, that's a Glenism. We're getting awesomer information there. Great as per usual. Thank you, Con, I appreciate it. Moody wanted me to take a look at CVS. I'll do that one last time before we leave. Frank says, well done, Glenn. Excellent. David says, sticking, but learning many things. Excellent. All right, so I do appreciate the feedback that we got. And I'm going to take a look at CVS real quick. There we go. Let's go take a look at CVS. I could do that for you real quick. CVS. Let's see where it ended up in the list. Right in the middle. Analyze it. Undervalued. Good upside potential. Not particularly a safe stock. And it's not going up in price. VST less than 1. All right? How quickly can I do that now? If you're not a subscriber, that is cool information to be able to analyze any of the over 8,000 stocks that we have. All right? And so don't forget, we want you to subscribe. It is subscribe. We want you to subscribe. Texas Pete said, how about day versus swing trading long? Excellent. I'm going to write that down. That's something that we can do. Swing and day trading. Excellent. I like that suggestion. Michael says, new investor, so I would say something somewhat prudent. Excellent. I like that, Michael. So at least it's getting you to think a little harder about the type of investor you are, because now when you start to invest in stocks, you have a feel of the types of stocks that fit your personality. And that was so important to get that across in this presentation, understanding the type of investor you are. All right? So with that, thank you for that suggestion, Pete, about the difference between day and swing trading. I am keeping a list of things that I'd like to show here. Show some jockey stocks. Not in here today, I won't. I'm not prepared for that today. But maybe we can talk about jockey stocks in future presentations as well. Do I want to write that down? Yes. Jockey Club, jockey training. I'll write that down too. All right. With that, folks, I'd like to say thank you for being here this afternoon, spending some time with us here. We are upgrading and updating our YouTube live channel. So stay on top. Make sure you subscribe. Stay on top of the new content that's coming in. We are, my super producer, Daniel, you can't hear him say hi. He's sitting in another whole part of the building. He's looking for doing this. He's the one that's helping to make the content that's there more fresh. All right, so that's what it's all about. That's what it's all about. So make sure you subscribe, so that you stay on top of what's going on. With that, folks, I want to say thank you for your time. Thank you for helping us to grow this live stream platform as well. This is going to be a beautiful thing. We've got a lot of followers. Now we just need to get them back to looking at what's going on here, and we're working on that, and you guys are going to be an integral part of that. Keep coming back. Let us know what content you want. Man, this is going to be a sweet thing. I love doing these live streams, and I don't mind ever answering anybody's questions. Ask the questions. YouTube's will be every Friday. Thank you, Devin. Will be on Fridays at 12. So just put that down. Make sure that you're here. Fridays at 12 will be YouTube every Friday. Excellent. Khan says he subscribed. Salute to you too, Devin. I appreciate that. All right, folks, with all of that, I'd like to say thank you. Have a great weekend. Adios. Arrivederci. Ciao. Au revoir. Sayonara. Thank you for taking the time to watch that presentation, but I know you're eager for more. So if you're looking for region-specific information, check out the UK and AU channels right here. Looking for more great VectorVest content? Click this video right here. If nothing else, folks, click the subscribe link right here.